Why is the market going up right now? What do you mean, why is it going up right now? Why wouldn't the market go up right now? Where else are people going to put their money right now? FOMC? I mean, there's a chance the FOMC signals an additional rate cut. I mean, they're not getting any data right now, and they have to make decisions based on the data they have and that they get, and they don't have any right now. So they're flying blind. And for some people, they're happy about that. They're like, oh, cool, this is going to be. Other people are like, oh, shit, they're going to make a bad decision. We don't know what's going to happen. We have no idea what's going to happen. You know, if they do end up doing a surprise announcement or an announcement on potential third cut, then people are looking at this as free money. And I'm not saying that it is, but that's how they're looking at it. And so, you know, hey, to each their own. I mean, I don't know how to, you know, give everybody, you know, their own belief on what they should think. I mean, it's going to really come down to the question and answer with Powell, and if he signals any type of you know, change in like the dot plot, right? Like what the expectations is of inflation. Because they've basically, remember, Powell has basically come out and said, we have no good option here. Either we maintain higher rates to keep bringing inflation down or battle tariff related or consumer costs, but watch the labor market fall off. Or we try to fix the labor market and watch inflation go up. And they've basically said, we're going to have to take the latter. And so if inflation is going to go up, the dollar is going to go down. If the dollar is going to go down, the value of the dollar goes down. And so what do you need to do? You need to put more money in things that are going to go up. And so more money goes into the market, the market goes up to balance out the dollar going down. And whether it's the expectation of debt being cheaper, like companies that are in debt, right? They have debt, their debt's going to be cheaper because the value of their debt at the time they took it is worth less over time, right? So think about it this way, right? This is kind of how we talk about, you know, appreciation, depreciation of assets and debt, right? One of the things is, and this is something that it took me a long time to grasp, money printer, right? Government prints money. That gives them what? More debt. And you're like, well, that's going to burst. They can't keep adding debt. Well, I used to be the type of person who's like, hey, listen, if a household spends more than they make, they're going to eventually go bankrupt, right? Just like the government will do it. And then I was like, wait a second. And I realized households don't have a money printer. So here's the thing. You think Nvidia has a circle jerk money loop right now? No, the government does. Because here's the thing. The government has printed so much money that the dollar has lost 50% of its value in like 7 years. Or even 10 years, right? Let's just throw it out there for you know, aesthetic reasons. Let's say in 10 years, inflation's up 50%. Just for example. Actually, I don't even know what it's up right now. Let's say 40%, but let's just say for the purpose of this whiteboard, 50%. So if inflation's up 50%, that means the value of the dollar, pretty much, you know, in a way of looking at it, is down 50%. So if the government is $38 trillion in debt, but 10 years ago, they were $25 trillion in debt. Well, technically, that $25 trillion is only worth $12.5 trillion because that's debt they took on when the dollar was worth 50% more. So they've devalued the dollar while also devaluing their debt. And as long as they keep printing and the value keeps going down, the debt that they take on today is technically worth less, as long as wages keep going up and everything like that. Because then, you know, it's a fucking circle jerk, right? It's just because remember, money's not real. Everyone keeps thinking money is real. I don't know why. I mean, it's real in the sense that if you don't have any, you die, and if you don't pay the government the money that you owe, you go to prison. But as far as like an actual thing, it's just a way of keeping score. There's no such thing as real money. So this idea that we're going to collapse because the dollar is devalued or we're taking on too much debt happened. Economic collapses happen because of private debt, not public debt. Because the government can just keep printing money, which devalues their debt, which means their debt is worth less. You're thinking that the government owes $38 trillion in today's dollars. Now, they're still paying interest on the debt that they took on, but remember, they've devalued it. And as long as we're in this cycle, this global fucking economy where everybody just pretends that they owe each other money and they're borrowing and shit like that. And as long as we have the greatest military and we have the reserve currency, then we can keep getting away with this. Now, think of the stock market. Same kind of concept. Dollar is down 14% this year. Market is up 16%, right? So you're up about 2% overall if you look at it from like a pure standpoint. But why are companies going up in revenue? Because here's the thing. Companies are using debt, okay, either issuing new debt or have debt on the books. But because the dollar is dying, their debt is worth less. But their revenue is going to increase. Why? Because due to inflation, right? Due to inflation, they are raising prices. And as long as they're raising prices at a nominally higher rate than what it costs them to make, they're making more money. All the while, the debt they have is worth less and less. So they're offsetting the inflation to the upside because they're raising prices, all the while getting a decrease here. That's just the company from a revenue standpoint. From a valuation standpoint, people don't care about valuation. There's people out there that are sitting there saying we're in a bubble. True. Okay, and now that we understand that, nothing changes. But the people who are the loudest about the bubbles are the ones who are on the sidelines. They're going to scream louder and louder the more it goes up because they just can't believe that it keeps going up. There's no way this should keep going up. Yes, it can. It's not a good thing, but it can. Well, you guys are stupid. You don't understand. I'm going to be here with cash when this thing comes crumbling down. That was 45% ago. You see what I mean? Yeah, well, that's fine. Laugh it up now because when it does crash, I'm going to be buying up all your shares at pennies on the dollar. If the market fell 25% right now, they still would be losing money if they bought. And that's if they bought the exact bottom before the next rebound. They'll never catch the bottom. So why fucking fight it? I know that sounds very capitalistic of me, but that's just the fact. The people that are all out there saying this is a bubble, it's going to burst. Yes, we've been saying that for 20 fucking years. We've been saying that for 100 years. And when it does pop, it inflates right back and you never catch the bottom. No one has lost more money than people who short the market. The second most amount of people who have lost money are people who are trying to time the bottom or sitting on the sidelines. You know what I mean? You have to just understand what's going on. It's not that the market is making everyone rich. The market is keeping you above water. That's the thing I hear all these younger influencers or some of the old heads too. Nobody wants to understand that the market isn't making you money. You don't use the market to make money. You use the market to grow money. The market is keeping your head above water. The S&P 500 is up 45% since its April lows. I'm glad we bought the shit out of that. But you're still only up 2% on the year off the dollar dying. You're not even making that much money unless you just sold everything at the exact top, bought everything at the bottom, sold it, paid the tax man, and you still have some money left over. The market hasn't made you any money. It's helped you sustain the value of the money. If you left that money in your bank account in the beginning in April versus now, yeah, you've missed out on 45% opportunity or 45% gain, okay, on the value of your money, but you still gotta understand that there's a valuation drop in the dollar. How do some institutions short the market and make a profit then? What's their advantage? Well, very few companies do that on a consistent basis. Most don't, and if they do, it's a small portion. But they used to be able to do it because when they created the money prior to COVID, prior to 2000 especially, in 2008. But let's say before 2020 especially. Okay, more so before 2008. An institution would do this. Citron did this very famously. They short a stock. Let's call the stock, it doesn't matter. I'm thinking of a stock that actually that this worked on, but I feel like I don't want to do that. I'm zoning out because I'm actually thinking of a million stocks. It doesn't matter. Let's call it DNS, okay? Which one is DNS? Davidson or whatever. They think that DNS is overvalued, but it's not falling, right? So they take a short position. So they short DNS. And they take out a short position of 1 million shares. And now here's what they do. That next day or a few days later or whatever, this firm, large firm with a big name, announces we are shorting this company because, and here's how they get away with it, we believe. That's all you have to say. Then it's not fucking, you're not slandering them. They're not liable if you write down. We believe that they are misrepresenting their numbers. We believe that there is debt that's not being disclosed. We believe this. Will be investigating. So now everyone else who doesn't have access to this information or didn't know, or the ones who have the first information before it gets to the regular person, now thinks, oh shit, this company might be way overvalued. So they sell their shares. And that causes the stock to drop. Then the average everyday man or the smaller institutions get to see that this company, reputable company, has shorted this for this reason, and the stock's already falling because people are out. We need to sell ours too, which drops even further. Hedge fund then comes in, covers their shorts, and makes a bunch of money. And then people say, God damn, they must be really good at this. How did they know? You ever heard that saying that says, be the change you want to see, create your own destiny? That's kind of what happened. The reason, when's the last time you heard of a company actually taking a big short position in the past year or two? Do you want to know why institutions aren't making big short positions anymore? Because they don't have the control like they used to. Look at us. We are the captains now. Retail has changed the game. When you have $5 to $10 billion a day inflow every single day from people just fucking dollar cost averaging or just adding to dips and shit like that, you can't do that anymore because everyone's looking for a dip to buy. So the problem is if you do this shit and it falls and retail comes in and buys that dip, you get squeezed the fuck out. It's not worth the risk right now. It's not worth the risk. Same reason that companies who see them short it don't dump their position, because they know that if they dump this position and then it gets bought up, they're going to miss that gap. Now, not in every situation, but it has changed the game. Everybody's got a fucking brokerage in their pocket now. And there's just money flowing in. International money, CTAs are flowing in. Fucking Mike and Betty with their fucking 401k that they didn't even pay attention to, that they have running now. So you don't hear about all of it. Just for example, nobody's lost more money in this market, in the stock market history, than people who shorted the market. One fucking guy did it once, made a bunch of money, and he's the only one you can name. You can name 100 people who have made ungodly amounts of money in the market. You can name one guy who made a fortune shorting it, and he was wrong the other 45 times that he shorted it. Do you know the S&P 500 is up 80% since Michael Burry last said to sell everything, or 60%? I'm not knocking on Burry. Fun fact about Michael Burry that people don't know: he almost took a $1 billion loss. The people who it was probably in the movie, probably slightly in the movie, but in real life, the money that he was borrowing to short the market, he wasn't. Not only were they wanting their money back from him, and he would have had to sell his shorts for a loss to do it, but he was paying interest on that, and it took so long for it to happen that he almost sold for a massive loss right before that massive gain.